Hi, this is TradingETFs.com. This is the ETF update for January 20th, 2016. We're starting off here with the QQQs. Once again, showing the long-term chart here. And you can see that in terms of price, we closed down 31 cents, which was not a very big move if you look at it just from a closing price standpoint. Price was, however, way down below the 98 price range that you don't see on the chart because, again, this plots the closing price. So we were down quite a bit today, and we recovered quite a bit of the downside move, and we only closed down 31 cents. So what you'll notice here is the long-term oscillator still continued to go to the downside. And so at this point, nothing has changed with the overall view on the market. It's still looks like it's headed down, although today it had a very big recovery in terms of the amount of points. The market was down and recovered quite a bit of that. Taking a look at the short-term oscillator here, you can see now the oscillator is moving up, price is moving down just a little bit here. So we're still looking for a point for the market to have some type of a rally for a couple days. Right now, even though the long-term oscillator continues to move down, it's still extremely oversold. And so, again, we're looking for an oversold rally to occur that would then allow the market to continue down even further. But once it gets oversold, it's like stretching a rubber band. The farther you stretch the rubber band, when you finally let go, the rubber band shoots back into shape quite rapidly. And so right now we're oversold. And the farther we get oversold in the short-term oscillator, the bigger the move will be, the quicker the move will be to the upside to alleviate that oversold position. And that's what then will put the market in a position to be able to turn around and start moving back down again. Again, based on the long-term oscillator, it shows that we're going to continue to move down. So right now, there's really nothing changed in the market. And let me show you the VXX. I had said yesterday that we were looking for price. I didn't believe price was going to continue to rise, but you can see here that it went up again. And notice that the short-term oscillator moved sideways. So, we're at the point where momentum to the upside is slowing. And I had said yesterday that the VXX has really not let you in a good buying position. And usually when that happens, the market is trying to suck you in. And the moment that you get sucked into that position, they pull the plug and down comes the price. So in other words, what I'm saying is, even though price rose today, it's still in the overbought range. So if you were to buy into the VXX right now, it could continue to rise. But your risk is that the price turns and sharply declines because the market is so oversold. And when I say the market, I'm talking about the QQQ I just discussed, the DIA, the SPY. Those are so oversold that if you buy into the VXX when the oscillator is so overbought, then you risk a tremendous amount of downside just for a possible few more points to the upside, and the risk reward just isn't there. So again, I'm still looking for the market to, or for the VXX to come back down in price. And you can see here that even though we got a big up move in price, the oscillator went sideways. So again, it's going to get harder and harder to continue to move to the upside with the oscillator. So let me take a look at the long-term oscillator on the VXX, and we'll see what that's showing right now. So here we have price continuing to rise way ahead of the oscillator. I mentioned yesterday that if you look at these other points, where the price got ahead of the oscillator, it's subject to big whipsaws. And this was what I was referring to. Let's say that you were wanting to get into the price in this area here because it was going up so sharply. And the moment you get into the price, you had one more up day, and then boom, you're right back down. Now you're closing below where you got in, and now your risk was just too lopsided to the downside. So here we are again. The price is leading the oscillator, and getting in at this point just exposes you to a big downturn. And right now, that's just not a good risk to reward. So we're sitting here just continuing to watch at this point. And let me also show you. We talked about. I think we talked about the TLT. I either showed you the. I think I showed you the 10-year note, but this is the actual 20-year Treasury bond, and you can see here we've had a pretty big move to the upside. We're extreme overbought, and so this again is right now is a safe haven trade. Money been moving into here to try and offset the losses in the market, and so we're at the extreme overbought. Take a look at the short-term oscillator. We're here at the top of the range as well. So again, everything looks like we just need to see, or everything looks like the safe haven trades are at the high end of the overbought range, and that would suggest that we're going to get a move to the downside, which means we're going to get a move to the upside in the diamond, the SPY, and the QQQs. It's just a matter of when. And so today, when we look at the diamond ETF, it'll show that we're still here in the oversold range. Price went down a pretty decent sized move, but overall the market was down some 550 points today, or at least the Dow was, and it ended up only being down. It was only down 249 points, so it recovered just about half the downside move. And so we're half of that move of the 550 that we were down that we ended up recovering. A lot of that had to do with positions that were short were getting calls to close their short positions. So it was a forced buy-in, in other words, and that created some buying coming in, and that's what allowed the market to recover half of the downside losses. But still, we're in the short term, or excuse me, we're short-term oversold. So any event, anything can trigger the market to move up to the upside. When I take a look at the long-term oscillator, let's see where we're at here as well. So in the long-term oscillator, we continue to move down. So really nothing has changed in the big picture view of the market. It's simply a matter of alleviating the oversold reading in the indices that we're looking for to be able to then take positions, expecting the market to continue to move down. So that's about it for right now. I'll continue to update over the next couple of days when anything occurs that warrants updating again. So thanks very much. Have a good night.